Welcome back. This is Capital Market and we're live on Channels Television. Well, let's catch a glimpse of the equities market now. Bearish sentiments persisted at the Nigerian equities market this week as the benchmark index closed at 4.39% lower. The all-share index dropped to 29,305.40, while market capitalization declined to 10.06 trillion naira. Total volume traded eased by 38.47% to 1.46 billion shares worth 17.06 billion naira and traded in 21,246 deals. Market breadth was negative with 22 gainers, topped by Julius Berger with 21.26% against 52 losers, led by Smart Products Nigeria with 25.49%. GTBank, FBN Holdings and Transcorp collectively accounted for 35.65% of total volume traded during the week. Now in the week, market capitalization of the equity market, as we said earlier, contracted by 461.7 billion naira to 10.1 trillion naira as activity level waned. Average volume and value traded fell 39.1% and 35.4% to 290.9 million units and of course 3.4 billion naira respectively. There is no doubt that the country's credit rating downgrade by Fitch Rating to B+ and the Brexit vote in the United Kingdom were the deciding factors for investors this week. Mr. Victor Ogenwoyi, who is the Chief Executive at Partnership Investment, joins us now to give us his analysis on the performance of the market for this week and the first half of the year which just ended. Mr. Ogenwoyi, good evening. Good to have you around again.
Thank you very much.
Let's begin with the weekly analysis. Why in the first place will the Fitch Ratings downgrading Nigeria to B+ as well as Brexit continue to have lingering impacts like these on equities?
Well, you will understand that whenever there's a downgrade, investors are a little bit wary of that market. There are reasons why you will expect a downgrade. We have had problems with our oil revenues. We're having problems all over the place with our economy. The inflation has risen to above 15%. Yeah. Just about anything that could make the market a little bit more, testy had happened in the last few weeks. However, there were some bright spots: the removal of fuel subsidy, the flexible exchange rates,
and that's why one will expect that should be helping to drive.
Well, unfortunately, just about when it was about to take off, Brexit came in. That created some uncertainty. There was a lot of uncertainty everywhere, and this is even more difficult because traders especially foreign traders, were focused on finding out what they should do about their domestic market. So Nigeria was not their priority at that point. But I believe that at the end of the day, we are going to also see positive going forward because once everybody settles down, Nigeria will seem like, well, a place that the equity market is very cheap. There's a flexible exchange rate now. We can go in and go out. I'm sure they will be looking this way in a few weeks.
Okay, so let's take a look at the first half, which has come to an end. We've seen 2 quarters so far this year. Now, some analysts have argued that the actions or inactions of the fiscal and monetary authorities were what brought us to this level that we found ourselves. Do you agree with that?
Completely, because the truth is that I think the first thing we should know is that better late than never. We're glad that they finally made up their minds to reverse these positions. But a lot of damage has been done to the economy. We've seen this before. If you look at the 84, 85 situation, exactly the same things that happened at that time. Just before the 1983 coup, there was a demand by the IMF to devalue the naira by 15%, which would have been meaningless. But unfortunately, the then government, which was also headed by the current president, refused to do and see any devaluation. As a result, the economy completely, dismantled. I don't know if you remember the days of essential commodities. There was no credit to the economy. Before you know it, people started lining up. We're almost getting there until this decision was made. So we should be very glad that at least we are seeing what can happen when you make terrible decisions. You must also look at the fact that I was surprised that people would not see how quickly we should adjust to market economics, because the removal of the subsidy showed us that market economics work. In a few days, all the fuel queues disappeared.
Yeah.
Now we're talking about a 40% decrease in demand for petroleum products. If you even look around in Lagos, you see there are fewer cars on the road. These are all things that we should see as making market economics superior. I think my own take is that we are happy that this has been done, even though it's late, but there's been a lot of damage. And that's one of the things that have affected the markets all over the place. There's still no confidence yet. The futures market that we established this last week is a very good idea. It's going to also stabilize the foreign exchange market, because what you're going to find is that most of the people who speculate the market, more or less, the futures market is organizing speculation at the proper place. Say, okay, if you want to speculate, come here and put your money where your mouth is. With a little bit of luck, we're going to see a situation where it will stabilize a bit. The problem we are having and why it did not take off as we expected is that the foreigners are still looking at it as the CBN hasn't put conviction. If they cleared the market, which was a good thing, about $4.something billion.
$4.2 billion.
People will say, where's the money? It's like if you were owing me and you wrote me a posted check, I'm a little wary. Until that check clears, you have not paid me. So even though they are future, so what I would have expected, as Bloomberg has also speculated, was that if you are taking that $4.6 billion, for instance, set this aside from the reserves and say, look, give it to some custodian and say, this will be settled, I think that will bring confidence back. But notwithstanding that, it's still a very good move. The biggest problem that people seem to think is that they believe that central bank is going to continue to supply. In a very short time, when that market takes off, central bank will be out of the picture. Money will come in, central bank become a small player. But now we need the central bank to kick up the liquidity, and they've done that.
But talking about money coming in, like you said, I mean, the plan is to repatriate diaspora funds, investments into the country, and see how you can guarantee some kind of profit for those investors. But the current situation that we are seeing, EU is likely to get into a global recession as a result of this Brexit. And of course, from UK as well, there is a problem at this time. Do you think this will still...
No, I agree with you. Even in Nigeria, economies still have a lot of fundamental problems. That's why the market is not stable. That's why you're seeing a lot of volatility. Something happens, we're happy, we jump into the market. Something happens, you saw the rapid gain of about 7.something% in last, and then pull back again another 5.something%. The idea is that we are going to live with this volatility for some time until the fundamentals are straightened out. But there are some areas that good news is on the air. For instance, the Minister of Petroleum announced that we're already back to 1.9 million barrels a day.
Yeah.
I was surprised with that quick ramp up in production. And he's saying that in another few weeks we'll probably have come back to 2.2. If that happens quick enough, that will be boosting, especially the fact that oil have also surprised, stabilized around the 43, 50 area. Yes, there will be recession in the EU, likely. Britain definitely. I think Britain has now learned that they need the world and the world doesn't need them. I think that's a major lesson from that. Nigeria has, in my opinion, seen the worst. So it's only going to go up going from now. It might be a little bit slower, but we're getting it right.
Right, sir. Okay, thank you so very much. We need you to hold on to your thoughts. Of course, you'll still be around till the next segment. But let's quickly take a look at the African indices. Most African stock exchanges this week closed in the red as investors across the continent continue to react to the UK referendum. The BRVN index was at 304.68 level, closing yesterday down to the south by 1.05%.